Hi guys, it's Thomas here from COTBase.com. Welcome to a weekly COT review. Today we're going to be looking at the 28th Commitments of Trade Report of 2020. Before I start the review, if you are new to this report and COT analysis, just so you know, at COT Base we offer a lot of help, tutorial videos, educational videos, also some written materials on COT. So a lot of information can be found at COTBase.com. So back to the review. This is the 28th report, as I said, and we shall start off with cotton, where we have the largest change in commercials positions, a 17% change to be exact. You can see that on the chart over there. There's no question this is larger than average. It can be considered a bearish COT change signal coming after a rally that's been going on for quite some time now. So it suggests we may see a bit of a decline happening in this market. If we move on to the 5 year chart, you can see that basically the past 1 year, we've been more in a bullish extreme territory. So we're not surprised to see some bounces off those bottoms. We are not at any bearish levels, so this rally that we are witnessing in the medium to long term could continue based on the analysis of the report. Crude oil is our next market, the Brent crude to be specific, with an 11% change in commercials positions. You can see that change size over there, just barely larger than average. Nothing too unusual, but it is bearish, suggesting some weakness coming early next week. If we move on to the 5 years chart, you can see that we are more or less in between the two extremes. So not much that we can dig out here from the report. You can go either way, but if we look at a shorter term picture, you can see we had a significant bullish extreme back in December of 2019 without a reaction, actually a surprise reaction from the market. So that was an unsuccessful bearish COT extreme, a bullish, unsuccessful bullish COT extreme signal. But the extreme stayed there, and eventually we saw the market bounce off of these lows. It's really you should be looking at the all of the markets. I would suggest the energy market complex in this case to really understand what traders and energy markets are doing. Moving on to the Australian dollar, where we have a 10% change in commercials positions. You can see that change just in a moment. Here it is. Definitely larger than average, but we have seen greater changes and continuing what we saw in crude oil and cotton. Again, this is a bearish change signal suggesting some weakness in the Australian dollar. If we move on to the 5 years chart, you can see that here we have a more clear picture. Although, again, we can state that it is between the two major extremes, the most bearish extreme that we witnessed in September of 2017 and this bullish extreme from October of 2018. So we're more or less in between those two, just at the zero line. So they're basically commercials and large speculators, and also small speculators are net zero. So there are as many long holdings as short holdings, right? So that's the case. But in relative terms, if you compare this to the past 2.5 years, it's definitely more bearish. So it is 118 report extreme in commercials, 117. So roughly 2 years extreme, suggesting that the Australian dollar could turn back down. We may see lower prices over there. Moving our attention to large speculators, COT Extreme, we've got the gasoline market on top of our list with 157 report extreme in large speculators. This is, of course, a bullish COT Extreme, suggesting further strengthening in this market. As I said, in the case of the Brent crude, of course, it's always good to look at correlating markets to really understand what's going on in energies. Nevertheless, just focusing on the gasoline market, it's obvious that traders have moved away from their bearish extremes that were there in January. A successful signal over there, pushing the market lower. Now we have came to this bullish extreme, suggesting this rally may be in the market for some more months and possibly years ahead of us. The Australian dollar, that's something we talked about. So we will move over to the copper market with a 68 report extreme in large speculators. You can see it on the chart over there. Again, no question, bearish extreme could grow to even greater levels. So that's something you should keep in mind before you jump into this market and start shorting it. So, you know, we had that bullish extreme just before we reached that bottom, but, you know, here we have a beautiful bearish extreme from June of 2018, a much greater extreme, showing you that the potential of an increase in the stress levels here is there. So we may see further strengthening in the copper market before it eventually reaches its top. And last but not least, we should open cocoa, where we have a 42 report extreme, so not that big of an extreme. But of course, it's always good to look at these extremes visually, meaning looking at the COT charts. And basically, you can see that this is more of a bullish extreme. The last major extreme was this bearish one not that long ago from February, just at that top. A wonderful signal, effective, no question about it. And of course, if you take the time and you go back in time, you will eventually witness what are those markets where these COT extreme signals are more effective, which ones are the ones that maybe they're not as effective. Cocoa seems to be one of the markets where you can really rely on these extreme signals. So here we are witnessing a strengthening in the bullish extreme. It can grow to greater levels. You can see examples of that, possibly the one from July of 2017, the most bullish extreme, suggesting caution could be advised and important, because this downtrend could continue before we reach that all-time or close to all-time extreme. Nevertheless, we are in a zone, I should say, where you can start thinking of the possibility that this downtrend that's been going on for a couple of months should reverse, and we may see higher prices coming. Of course, don't forget, I'm always giving you a brief picture of markets, not all markets. You can see I'm just showing you a few market categories. You can analyze new CO2 report types, other data types, analyze any data set that you're interested in. You can dig deeper into the report. You can look at the COT index, the MOVE index. We have this wonderful long-term trend indicator. And also you can analyze volume and open interest. Of course, you can always go back in time. And by the way, if you want to look at a specific market, for instance, the Australian dollar, you can always do that, and you will get all the data that you want. A lot of analysis here. Really, it's a huge amount of data that you can analyze. You can always open each data set and chart them if you wish. So a lot to do here at COT Base. I hope you enjoyed this review. Thank you very much for your attention. Take care. Have a nice weekend, and see you next week. Bye-bye.